Hi everyone, this is our webinar session today regarding pros and cons of outsourcing. I have a wonderful panel here, but before we make an intro, I would like to give some housekeeping items. So obviously this webinar is under the NASPA rules and regulations, and we will provide you a CP certificate. In order to get the CPE certificate, you need to submit at least 4 polling questions, at least 3 out of 7. So we have more polling questions for you, so you guys can easily get the CPE certificate. And if you don't hear from us or don't receive the CPE certificate, please reach out to the person at the bottom of our PowerPoint. And you can also access the PowerPoint online. Okay, so let's start, right? I have Mr. Catcher, I have Mr. Rosen. So start with Mr. Catcher. Can you please tell us about Blue Ribbon CFO?
Yeah, sure. Thanks for the invitation. I'm happy to be here with everybody. My name is Steve Catcher, and I've been running Blue Ribbon CFOs since 2018. Blue Ribbon CFOs services primarily investment managers. And so we do the full gamut of outsourced CFO consulting, finance, accounting, bookkeeping, and really everything in between that helps managers focus on the things that are most important to them, returns, marketing, and lets us handle just about everything else. We've got clients that use us for light service, and we've got clients that use us for heavy service. Previously, before I started Blue Ribbon, I was a dedicated CFO for 2 funds, seeded by Tiger Management, as well as for an activist manager. And I cut my teeth working on the fund admin side. I did that for about 7 years, getting started with firms such as Citco, Bank of New York, and IFS.
Awesome. Thank you, Mr. Catcher. Mr. Rosen, can you please tell us about Akram and Associates and about your profile?
Absolutely. So Akram and Associates is a full-service accounting firm that provides assurance, advisory, and tax services to, mostly to the financial industry, hedge funds, private equity funds. We have some crypto funds. It's your typical boutique accounting firm. I've been doing this for 20 plus years, not only on the audit side, but also at a hedge fund administrator and as the CFO at a $500 million hedge fund. So I've seen audit, tax, internal and external. So my experience is across the board with everything that Mr. Catcher spoke of earlier.
Awesome. Thank you. So one distinguished between both of you is that Mr. Catcher running a shop as outsourced CFO, but Mr. Rosen has had opportunity to work in-house CFO, and they can really explain more the pros and cons, why outsourcing works better in certain cases. Okay, let's start the conversation. So my question to Mr. Catcher is that outsourcing, right? So obviously there's some core functions of any hedge fund business, and then there are non-core functions. What core functions fund manager like to do and keep in-house, and what functions they would like to outsource, and what's the mindset behind the reasoning behind for the fund managers?
Yeah, I think the answer, at least in my experience, is no two are alike. Just as emerging managers sometimes will hire a dedicated CFO on day one because they feel that it's important to have that representation. Maybe a seat allocator is suggesting that they have that. But alternatively, emerging managers that have been around for a few years even, choose to outsource different aspects of the business. Predominantly, I think the conversation starts with fund accounting, right? And so if whoever they've chosen as a fund administrator certainly maintains the books and records, but varying degrees of managers will be involved in that from day one. If they don't hire someone to look after the non-investment side of the business, they'll either be checking it themselves, or sometimes to everyone's detriment. I think allowing the fund administrator to be a rubber stamp. Whatever they said, they must be smart, so they do it. And why do managers do this? It's budget, right? Because analysts cost what they cost, real estate is what it is, and there's a fixed budget. And so a lot of times what you'll see is you'll get the phone call and ask for a conversation about how can you help us. And what I find is that the best engagement is the one where we can do everything you need, meaning we'll review the NAV work. We'll look at cash and positions on a daily basis and communicate with your service providers, your administrator, your PB, talking with audit and tax at year end. But I think that we can service a client better if we have the full picture, meaning we're looking at the management company as well. And by doing that, we get a handle for where the strengths and weaknesses are with the managers. But also, having that information is useful in our conversations with the manager because we can help them make decisions. As management fee grows and there's more of an available budget, we can help them decide who that next hire should be. In some cases, it replaces us, and we're okay with that. Because we think that good service entails giving good information, and sometimes that's how it goes. But I think we're appreciated for looking at the entire picture and being able to help from that perspective.
Thank you, Mr. Rosen. What do you think are the main reason for our fund managers to keep a CFO in-house, not thinking about outsourcing?
Well, as Mr. Catcher alluded to, one of the big reasons is because, again, some big potential, either whether seed investor or institutional investor is coming in and they won't write you that check without seeing an in-house CFO. And I have found that you can actually get around that if you're upfront with them initially and say, listen, we're just starting out, we're growing. Right now we're outsourcing, but our plan, show them the roadmap. The plan is, 2, 3, 4, whatever it is, 5 years down the line, we're going to have an in-house. In-house initially, unless you're starting a really large fund, it just doesn't make sense because you wind up doing what we term the dirty work, right? And you're at that rate, you're providing no value. So you're better off outsourcing as opposed to keeping it in-house at that point. The other reason that, somebody may want to keep everything in-house as opposed to out would be that they want to keep all the information as close to the belt as possible, right? They don't want anybody else to know anything. All managers are very sensitive to their information, their portfolio, their investors, and everything else. So it becomes quite a difficult task to balance those two. But at some point, you have to balance those two. Otherwise, you will not succeed.
That's a very good point. Let's discuss the economics of making that decision in-house versus outsource CFO, right? Mr. Catcher, what do you think is the in-house cost versus outsource cost overall? Depends on the city.
Yeah, it does, and it's a question that all managers ask at one point or another, and unfortunately, and Mr. Rosen may agree with me here, they under budget for this function, right? How hard is it to take a look at some calculations and push out some reconciliations? I think you're underserving yourself. You, the manager, are underserving yourself if you're going out and saying, hey, my budget is $100,000 or $150,000 and trying to find a candidate that will fit in that role for that price. with maybe just the promise of upside. The fund does well, you'll do well as well. And there's plenty of, instances where high-level C-suite executives came in at a low base salary and did just fine for themselves. But I think, what you tend to attract is junior folks, and junior folks are good people, right? It's not to say that they aren't, but the lack of experience, I think, is what does the fund a detriment, because that person may not have seen the ins and outs. They may not have been a part of funds that haven't worked out. They haven't worked on the service side enough of the business to understand the pitfalls that some more junior folks will see, and so that's why I think that the conversation that I like to have with prospective clients of ours is, what are you trying to do? Do you really need someone in the chair that's called the CFO, or let's talk about some of the responsibilities that are necessary and that you think are going to need to be done on a daily, weekly, or annual basis, and that kind of leads the manager down a path to maybe making a decision. From our side of the business, from the outsourced side of the business, we can fit in your budget, right? What is your budget? Because the ability to have what I call more horsepower for your dollar, meaning you're taking a seasoned pro with quite a bit more experience than you're probably going to attract with a lower base salary, and you're using that person on a fractional basis. And the best relationships, once you kind of hire that more seasoned pro, means that you use them as you need them. If you don't need them, you don't pay them, right? And so maybe it's an hourly basis that you're budgeting each month or each quarter, and you can toggle that up or toggle that down based on your needs. But what you get in return for that same budget is someone that has been in that seat before and can help you make some good decisions. So I think that for a given $100,000 budget, I think you can get much more out of it if you talk to and choose the right outsource firm.
Right. So I just want to throw something in there, and I'm sure that Mr. Catcher has probably seen this as well, and because I know I have. So to your point, when you're, again, take that $100,000 baseline, right? The candidates you're getting are candidates that should be probably controllers or assistant controllers as opposed to CFOs. So you're trying to push a square peg into a round hole, and what you wind up getting is somebody that's overwhelmed and underprepared. And then as the fund manager, you have to go out and now spend additional money to rectify that problem.
Right.
Yeah, I agree.
Okay. One thing I just want to make sure that I'm showing the PDF to our attendees. They can see that, right?
I can, yeah.
Okay. Okay. So let's continue the conversation more. So my question to Mr. Catcher is that when you say outsource CFO, right? What type of functions outsource CFO usually performs, and is there anything that should not be delegated to outsource CFO, should be done by the fund manager?
Yeah, again, I think the answer varies, right? And the answer varies on the complexity of your firm. For emerging managers that aren't quite sure what they need, I think the more you outsource, the better experience you're gonna have. And for more established managers, regardless of AUM, maybe they know a little more about what they need, because perhaps they've been that person that says, I'll look after accounting on nights and weekends, or my nephew will be our intern and will help here and there. So maybe they know a little bit more about what they need. But folks who come to us, as I alluded to before, some of them just need some help with the management company, right? Hey, here are our bank accounts. Here's what we have set up currently. Give us a reconciliation and a set of financials each month, and we're good. Others want a little bit more handholding, and I think that's where I try to be a little bit different with the service that we offer, and really offer kind of a white glove experience, because again, no two managers are the same. And so that means that the needs that they have are different. And so for some clients, they actually want us to be available for weekly all hands meetings, right? All their employees, whether they're remote or in the office, will get together once a week, and they need someone from finance and accounting to represent that department on the call. And so we'll do that for the manager, because that gives them a little bit comfort, additional comfort anyway, that we're thinking of things that are, beyond just, is the nav going to go out on time, right? The more, and I really feel strongly that the more you share with us, listen, we sign NDAs, it would be catastrophic for our business if we went around sharing information across managers. So, we feel that, first and foremost, you need to choose someone that you feel like you can trust, and put some legal documents behind that, just to make sure that your information is safe. But after that, the more information you can share with us, the better we can serve you. And again, we can give you better information. We can help further your cause, even if it means at some point you grow to the point where you need to hire somebody. Maybe we can make introductions for you. We know how your business works, rather than just saying, I need a CFO full time in the office. No, you need a CFO with a specific kind of experience. Somebody that is capable, particularly if you're going to be a one-person accounting team, somebody that's capable of working independently, right? The investment team goes off and they strategize on performance and how the portfolio is going to look. Investor relations, marketing, they do their thing. Well, how does the accounting person fit in? And if you're going to have a one-person shop, that person needs to be somebody that's comfortable working on their own, researching, leveraging their network, and I feel like that's where we add the most value, is helping them in that area.
So do they ask you to do beyond the financial accounting reporting, right? And regarding vendors management, IT, information technology, software selection, any other areas which they expect other than the core function of outsourcing?
Yeah, I think they do. And I'll be the first to admit, when we're talking and discussing what you need and what at least my firm can do for you, the knowledge base that I have in areas that are not accounting and finance, I know who the vendors are that I like to work with and have had good experiences with. I make introductions, and once you select those vendors, we assist with vendor management. But sometimes you get a referral, and folks are coming in because they found something about their business that's very unique and specialized, and either they don't have the skill set in-house to do the work, or they just don't have the time. And I think the latter case is really most frequent. Is we know how to do what we need to do, we just don't have the time. And so can you help us with X? And a lot of times what folks will come to us with is actually expense allocations, right? Particularly when they have different strategies, different products. They've got vendors that send them bills. Maybe it's a multi-manager platform, and they need to slice and dice all of their monthly invoices in a way that's fair to all client accounts. And that's a heavy lift. There's a lot of work that's involved. And, from my perspective, and not a lot of outsource firms do that work, but we've had success in taking on those functions so that the manager can frankly just focus their time on other things. And so, we'll get interest in those areas. On top of that, it's, how can you help my investor relations person? Can you assist with preparing marketing materials? You touch the monthly performance, so can you drop that information in our firm overview slideshow? We touch a lot of different areas, and again, that's good for us because we get to learn more about your business and how you operate, and it's good for you because you don't need to go and hire a junior investor relations associate just to do that work. We've done it before, and that's frankly what falls under the non-investment purview at most shops.
That's very good to know, because I think most of the emerging managers don't know, because most of the time they have not launched any fund before, or then this is their first business ever, and they don't know all the interrelated things that you can get a help from outsource CFO.
Yeah.
I will start, once we'll come back from the poll, I will ask questions to Steve, but let's go for a poll first. I'm going to launch a poll. Okay, so let me ask another poll so that we can get over with this page. Okay, yeah, so before we proceed, these were the polling questions we had to get the CP. So one was that, what was the traditional perception of outsourcing in the investment management industry? So it was very easy. Majority of the people said that A is the greater efficiencies and reduce operational risk. Second was reasons why firms choose to outsource their investment management functions today. And I believe 80% of the people say to current on technology with regular upgrades and for business continuity. And so also to have more control and compliance requirement. So my question to you, Steve, Rosen, is there's no regulatory requirement to have outsource CFO or chief financial officer. If there is for certain funds, please let us know. But is there any legal requirement to have chief compliance officer, CCO? What's your thoughts around that? First, I can touch this, ask Mr. Rosen and then Mr. Kasserman.
Well, you know, you have to have those if you're an RIA. If you're not an RIA, then there's no requirement.
Right.
Right? So if you're an RIA registered with the SEC and you're above that $150 million, you have to have it. No ifs, ands, or buts, right? That doesn't mean that you can't work in tandem with an outsourced CFO company, but you actually have to have somebody in-house that's taking responsibility for whether it's, you know, CFO, COO service, whatever it might be, right? So at that point, you are kind of, you know, creating a double expense for the role, which again, if you're a big enough fund, might work out to your advantage because as we all know, when you're sitting in your chair day to day, whatever chair that is, and it doesn't matter if it's your a low level person, a mid level person, a C-suite person, you're doing so many things, you don't always have the time to keep current on all the changes that are evolving in the industry and all the new rules and everything else. So there may be some cost benefit there to having, you know, at least part of those functions outsourced, maybe not on a daily or weekly basis, but maybe it's a quarterly. You have somebody come in and review, you know, to make sure that, hey, I'm filing, I'm doing my filings on time. I'm sending out the NAVs on time. I'm communicating with everybody that I need to properly. So, again, it all comes down to, like Mr. Catcher said, in general, it all comes down to cost benefit. I will tell you that if I was an investor coming in to write a $20 million check to a fund, and I saw they had an internal CFO, COO, and they had an outsourced person that came in quarterly, semi-annually to come in and review, I'd be very happy about that.
Yeah, I'd agree. It's the relationship between managers and their compliance department, whatever it amounts to be. It's a necessary evil, unfortunately. The regulatory landscape is so complex, and is getting more so, that although you can have a CCO that is dual rolled, meaning you could have a CFO / CCO, and I think we see that a lot. Regulators, they want to know that you're doing what you say you do, and can prove it. And what you find, I think, and this goes back to why do you go outsource in the first place, is a single person accounting and finance department. You're going to hire that CFO for that $100,000 budget that we mentioned. That person is a single person, and they can only do so much. There's bills to pay, there's NAVs to approve, right? They need to look after all the finance and accounting. And then if you saddle that person on top of that with staying current on current regulations, it's a tall order for any single person. And if you're not helping them in some way, by having them a junior person on the team, outsourcing it in some manner, or altogether hiring an outsourced solution for compliance, your number is going to be called eventually. And during that examination, whether it's the SEC or otherwise, it's going to be a difficult conversation. And that's the kind of thing that you don't want to be put out of business over, right? If you don't make money, if you have issues in the market, listen, that's common, and people can understand that. Not a lot of folks who maintain kind of a environment of no compliance or minimal compliance. Those folks don't get second opportunities, that I can tell. And so, unfortunately, it's not an inexpensive proposition, but you really need help there. And just, nominating the person who draws the shortest straw to be the de facto CCO, it just doesn't cut it anymore, unfortunately.
Right. So, but what did you, Mr. Catcher, have seen for emerging managers? Assume emerging managers were not big enough that they need to register with SEC. What's their tendency? Are they inclined more towards outsource CFO at this in 2023 versus the in-house CFO? I know that 15 years ago, there was no concept of outsource. Everything was done in-house because of the technology and all that. Technology has enabled cloud computing and all that. Hosting allows a lot of things to outsource. So what do you think at this moment of the percentage, a rough estimate of emerging managers hiring outsourced CFO or in-house?
Yeah, it's hard to put a number on it, but if you look at it pre-COVID and post-COVID, right? Before COVID, there certainly were outsourced CFO firms doing a multitude of services, right? And some of them even did a good job at it. What we saw when nobody could go into the office and people had to work from home for extended periods of time is that technology that you didn't want to kick the tires on, it actually works, right? We're using it today. Zoom, Teams, there's so many tools now that gives a manager access to talent that they didn't otherwise have. And that could mean by allowing their in-house folks some time away from the office and working from home. That's been, it depends on who you ask, but it's on average, it's been a bonus to the individual workers. But I think the willingness to trust someone based on their credentials and based on their history and client referrals and things of that nature, the willingness has tripled or quadrupled in my estimation, to at least have the conversation. Maybe it's not right for all businesses, and it probably isn't right for all businesses. But I suspect that there is a component of your business, regardless of your budget, that you could outsource, just to give it a shot, right? Because what you have access to, again, more horsepower for your given dollar, right? Rather than hiring a junior person, paying to what's the multiple these days? It's like 1.4 times, right? So $100,000 employee. Well, it's a $140,000 employee after you add benefits and taxes and the real estate component. So instead, taking a slice of that and allocating it to an outsourced provider, somebody that you feel like you can trust, you get a lot more efficiency for that. And I think managers are much more willing to have that conversation and make the jump and are satisfied. I think that because there's a broad landscape of outsourced providers, some are good and some are not so good. You need to do your due diligence, and you need to ask around, and there's a lot of folks, frankly, that are between jobs that are calling themselves outsourced CFOs. And in my experience, those people are available and they're willing and they're ready to do work. But if they get that next job offer, they disappear. And now what do you do for your business? And so I think it's an important component of the conversation is not just to go for the lowest cost provider, because that lowest cost provider is here today, but they may not be there tomorrow. And so that's some of the work that I think you need to do on the due diligence side. But if you do make an informed decision, I feel that you'll be happy that you did. And now you can reallocate those internal resources elsewhere for things that you must have in the office. And so, like I said, managers are much more willing to have conversations with us. And we're happy to have those conversations because we can expose them to some of the benefits that maybe they're not thinking about. You've got two happy parties on either side if you do that. And so, Mr. Rosen, you can comment on what you see, but I think it's grown tremendously.
Yes, it has. And again, not to belabor the point, but you go back 10, 12, 15 years, you couldn't get a fund manager to outsource anything. It was hard enough to get them to outsource to a fund administrator, right? Because they just didn't want their information out there, right? They wanted to keep everything close to the vest. As regulation has changed and the amount of work and due diligence and research that needs to go into actually doing your job as a CFO or a COO or any other, high level person, they've been more willing to open up the book a little bit and say, okay, we need to outsource maybe not everything, but certain parts of these functions because we just don't have the time. And ultimately, especially for the fund manager, the old saying is true: time is money.
Agreed.
Awesome. No, that was a great insight by both of you on this topic. So my question to Mr. Catcher is is this being outsourced CFO? Do you wear the chief compliance officer hat for some of the emerging managers also, or is this a different animal and you don't want to get involved into that?
Yeah, I mean, I'll caveat, it depends on the manager. We have clients that have dedicated chief compliance officers. They don't have a CFO, but they have dedicated chief compliance officers. And that's the decision that they made and how best to spend the budget that they have. And so what do we do in those instances is we assist, right? The reviews and the checks that are necessary from an internal compliance standpoint, right? A gift and entertainment log, personal trading policy enforcement, considering conflicts of interest. All of that takes work. And so in certain engagements that we have, we help the CCO that's in the chair in the manager's office facilitate those things. And so, we can be a resource because we're kind of under the veil of confidentiality. We have access to certain things that allows the manager, even still, it's a single person in a chair. That person needs to go and stay relevant on changes in regulation. Maybe they don't have enough effort and time to go through all those things, and yet they still need done because, again, when that examination occurs, the SEC is going to ask for proof, not just do you do it, well, document, show me the documentation that these checks occurred, email reviews and so on. And so, to the extent possible, we will help managers go through those checks to maintain compliance and give them a sense that the things are being looked after, and there's no surprises should there be an event that they would have to prove it.
Steve Rosen, right? So when you were a CFO of a fund manager, was this the CCO function was in-house, or you guys have outsourced, or CFO was wearing that hat?
So the way we had it was actually a combination. We had an in-house CCO, but that CCO also had the backing of, what at the time was a law firm that provided compliance assistance, right? So we had them on retainer. So there was kind of a twofold there, right? Our in-house CCO was basically acting as CCO / legal counsel. Mm-hmm. And we also had, like I said, a retainer with a law firm that provided CCO services as well. And for the firm I was at, it worked out pretty well for the simple fact that, the internal CCO, gets bogged down with daily nonsense, right? Yeah. Somebody processed a trade that they weren't allowed to make. Somebody, somebody didn't press the button to send the regulatory filing to the SEC, right? Somebody went over the meals and entertainment allotment and tried to get it reimbursed, whatever it was, right? And they had to deal with trying to fix that internally. And then you have other issues that come up, and it's real nice to be able to pick up the phone and say, okay, outsource COO company, I need help with A, B, and C within the next week. And it's a wonderful thing. Like I said, not every fund manager has the ability to do it, but if you can, it tends to be beneficial.
So now my question to both of you are more on the regular audits being done by SEC to the investment advisor. They have to come up for a few years to make sure that you're complying with the securities laws. Mm-hmm. Have you guys experienced those audits? SEC audits. Second is, if you have experienced those such audits, was there focus towards CCO, chief accounting officer, chief financial officer, fund manager, or above all? What were their main, and how could you help the fund manager to navigate those audits? Start with Mr. Catcher.
Yeah, I have been part of an SEC examination, and at no times was it pleasant. Even it's kind of like getting yelled at by your parents. Even if you haven't done anything wrong, they'll find something that they don't like, and you can joke, but the goal I think that the manager should have is, make sure whatever deficiencies that they find are foot faults and not major career-ending mistakes. And so how do you do that, right? And so the examination team will come in and how they like to do it is they just like to have conversations. They like to talk about the compliance program and give you an opportunity to demonstrate the knowledge that all employees, not just the fund manager or the CCO, whoever that person is, but the rank and file, the fund accountant, the research analyst, just talk about compliance. How does it impact your daily life? And they kind of put you in a position where you say some things, whether they're accurate or not, where they start probing. And then they start, understanding a little bit more about your business and asking deeper questions. But how does the CCO, because that's the person that's signing the documents, or the fund manager who ultimately is in charge of the firm, how do they protect themselves? Well, if you don't have somebody dedicated for that role, or frankly, you don't have somebody that is necessarily trained for that role. Again, the CFO/CCO is common enough. I would argue that that particular person isn't necessarily highly skilled in both areas of the business. And so how do you support that person? You support that person with a compliance consultant if you can afford one. If you can't, choose your favorite hedge fund serving law firm, private equity serving law firm. They have deep benches with folks that are willing to talk to you on hourly basis to discuss those points and help you build a compliance program at your shop. And that's a great option for folks that just don't have the budget to hire a full service firm to help them with compliance. Is talk to a counsel that is aware of the regulations and can help you build one yourself. But ultimately, I think to answer your question of how do you protect yourself, the fund manager needs to decide who is the ultimate person responsible for name the area of compliance that's necessary. Sometimes it's a single person, sometimes it's other people, but you need to make sure that you can demonstrate for the examination staff that comes into your office that you're thoughtful and you're human and mistakes will happen. But the program that you've designed internally is set up so that mistakes can be caught, errors can be corrected, whether it's trade errors on the portfolio side, whether it's lack of compliance with personal trading accounts, having repercussions internally for your employees gives the staff the comfort that they're looking for, that investors in your fund will not be defrauded because you have designed a program that's going to eliminate or at least attempt to do so.
Steve?
Yeah, yes. So, and I have been through, a couple of those as well. And I can tell you when they come in and do a blanket of everything. They will ask questions from the lowest level staff to the highest level staff. And they will basically, if they don't like what they hear, or it doesn't make sense to them, or they just want to dig they will keep asking. And eventually what's going to happen is they're going to get to a point where, okay, you have this process in place, and that's great. Manual's great, process is great, but you didn't follow through on it. And that's one of the biggest flaws that I've seen when the SEC comes in and they're looking at everything, right? And it could be something as simple as, oh, it says here that the CFO is supposed to sign the monthly NAV. Well, they didn't do it in these 3 months, and they're going to slap you for that. I've seen even on the compliance side, they've gone as far as looking at the portfolio manager's LinkedIn page, and it wasn't updated to properly reflect, their job duties, and they'll come in and slap you there. So ultimately, even though you may have the policies, you may have, you know, a 2,000-page manual that says this is what we do. Just make sure you follow it and you have the people under you to implement that. Otherwise, you're just going to get slapped.
Mr. Ketchler, anything would you like to add? Or?
No, I agree with Mr. Rosen's sentiments, and I think it's to demonstrate that you have a culture of compliance, and you're not just paying lip service to the regulators, but you're ultimately thinking about the best interests of your investors, because that's who they're there to serve. You know, all of those things. Think about what could possibly go wrong, right? Those deficiency letters are out there, and you know you can see in some cases what some firms have been dinged for. And again, sometimes it's foot fault. Sometimes it's, you know, you mentioned LinkedIn page. Maybe you belong to a charity and you're on the board of a charity, but you didn't disclose that to your compliance manager.
Mm-hmm.
And that lack of disclosure starts a conversation of, okay, well, they didn't disclose this. Maybe that's seemingly innocuous, but what else didn't they disclose, right? And so that's where the probing continues. And if they feel that you're withholding information, or they feel that they haven't been given, you know, all the information they need, that's when seemingly minor infractions become something major. Again, because you can be censured. There's certainly a history of, you know, excessive fees that are levied to managers, and again, this is the kind of thing that you know, during the due diligence process of a prospective investor, that's going to make them go in the opposite direction, and that shouldn't be the deal breaker that keeps you from getting the you know, the $100 million ticket or so on.
Awesome. It's time for polling questions. We'll have to, let's start. Another polling question, the second one. Let me launch this. Okay, so why do firms consider outsourcing back office tasks such as data management and reconciliations? I think 80% people say C, to execute tasks more efficiently and reduce compliance risk. Okay, let's continue. So we have another few minutes, right? So let's discuss more what should we outsource and what we should not, right? I think we touched in a bit earlier too, but from Mr. Catcher, very quick, couple of minutes, which area fund managers should focus on outsourcing and which we should not?
Yeah, I think in short, I think it depends. If you have anyone at all on staff that's looking after accounting functions, then you know, the go-to option is management company, right? A lot of times management company is a little bit more focused on the manager, him or herself, and so that's an easy fix. for an outsource consultant to assist with, and we do that for lots of folks. But if there's nobody in place at all, and you really just need some coverage from accounting and finance standpoint, you got to look at it first and foremost, the fund, right, and make sure that the administrator, if you have one, is not a rubber stamp. There is a control process, and that can be a lengthy one or a short one. But the folks on the admin side, that they're humans too, and mistakes can be made. Mistakes can be made in entering data, but there also can be mistakes made if they don't accurately read the documentation, on how fees are applied or how expenses are shared. And so I think it's helpful from my perspective on the outsource side is to have an extra pair of hands to review those things, to ensure ultimately that when you send out investor statements that everything has been gone through with a fine-tooth comb, and there's no need for a restatement later on. And so we can certainly help with that, and we try to. And again, there's lots of folks out there that do different areas of the outsource landscape. But I think having good conversations with folks, and that will help you narrow in on who's the right provider.
Steve, anything from you that on the financial reporting side, performance management?
Right. So it actually, and again, it there's a direct correlation to the staff that you've hired to what needs to be outsourced, right? If you're able to get your hands on a bunch of, let's just say mid-level people, you may be able to outsource the reconciliations and the mid-level people can do the review. If you cannot get mid-level people and all you have are a bunch of juniors, then those juniors or those new people, you want them to do the lower level stuff and outsource the more difficult stuff. So, it's not just do this or that, right? You actually have to sit there and evaluate your entire staff before you can say what should be outsourced.
So another polling questions. I think after that should be very close. Next one. So I think the last one, what's the main reason for firms to outsource the investment management industry? So I think both are correct. The focus on revenue generating activities and the core activities are gain access to external resources. Okay, so I think this is a checklist that outsourcing is more for the technology. We are not technology people here, but overall SSA A16, right? The controls, the SAS is really relevant for auditors to rely on the controls. Steve Rosen, would you like to tell us that the importance of SAS A16? the controls, the SOC 1 reports?
Right. So from an audit perspective, if you're dealing with a firm that has those SaaS reports, you're relying on those reports to cut down the amount of substantive testing or any testing that you need to do. It makes our job a little easier, because those reports have probably been done by, whether it's one of the big four, or even a national firm, or that specializes in doing those things, and you can rely on them without having to put your time and effort in to make sure that everything is working the way it should. Right? You've already got the report. They've done all the walkthroughs. They've done the testing. And if anybody would have anything to say, you would say, listen, our service provider, they have this. So not only are they doing it, but we're also including it as part of our audit. So me as an investor or a potential investor, I would look at that and say, awesome, I like that.
Awesome. I would ask Mr. Catcher about the disaster recovery plan or business continuity. Is this quite common for fund managers to have those? Do they, or even the outsourced service providers you guys work with, do you ask them to have those disaster recovery plans? God forbid if there is a hurricane or something happen, fire outburst.
Yeah, again, it's a case by case conversation. By no means do we force someone to have something from a compliance standpoint that isn't a service that we provide. But again, the higher touch relationships that we can have with our clients anyway, we talk about things that are outside of just accounting and finance. We talk about the culture of compliance. Again, having been through the experiences that we've been through with folks on our side, we want to make the manager feel as comfortable as they possibly can by sharing information and allowing them to use our experience to further build out their own firm. And some of the things we can help them with, in some of the things that we cannot. But I think that we do a service to our clients by helping them check the boxes that they need to check to be a well-rounded institution, and they can feel comfortable that things are being looked after, and that there are no unknowns, right? All the boxes have been ticked and things are being looked into, and so we like to have those conversations with our clients for sure.
One last question before we ask for a polling question. If an emerging manager has a budget of 150K and he has to hire someone for either the chief compliance officer, chief operating officer, chief financial officer, right? IT person, whatever, right? So what would you recommend them? Which person is more important to hire first? And the budget should allocate towards that person.
Yeah, I would say that the budget is best served from the finance and accounting function, because those same folks have a skill set that is hard to replicate if you are just a attorney. It's hard to replicate if you are just a manager, right? So a good skill set based in accounting has other areas that can be of service, right? And so you see that most frequently with firms that hire a CFO as their only non-investment person. That person is also the chief compliance officer. That person is also the office manager who looks after hiring new vendors such as IT, audit and tax, and things like that. And so, I think that whether it's insourced or outsourced, I think that using that budget, to find the right solution for your firm from an accounting and finance standpoint, and the rest can be taken care of from there. Good guidance is always offered by a good service provider, and so I think that's something that should be on your list as you're interviewing folks for that position?
Steve?
For me, I'd kind of be torn because everything is now so compliance heavy. If I have a fund admin and I have a fairly decent internal staff at a mid-senior level, I'd be more inclined to go the chief compliance officer route, for the simple fact that most of the time a chief compliance officer is going to probably run you more in terms of salary, upfront salary, and the amount of work that they need to do and the amount of research they need to do and the amount of regulations they need to keep up on just becomes too taxing. So for me, I would lean more towards the chief compliance officer outsource.
Okay, awesome. Thank you. Let me ask this last polling question, and then I will say conclude this. Okay, I think we have 7 polling questions, but you're only required to answer 3. If you have answered 3 out of 7, we will be happy to submit the certificate for you guys. If you don't receive it in the next few days, please reach out to us at the bottom of the email at the right at tanveed@aifundservices.com. I would like to thank you, Mr. Catcher, Mr. Rosen, for sharing their insight regarding outsourcing. I hope it would be helpful for everyone. Thank you. Bye.
Thanks for being here.
Thank you.